We've talked about Gary Oldman, just like the villain haircuts, the villain scale of Gary Oldman, but then it's like, actually, let's walk that back and just look at the full range of Gary Oldman. That dude is
a complete stud. Like, he's one of the best actors of all time, I think.
Absolutely.
I mean, he's a complete chameleon. I mean, I thought Elon Musk was him for a second because, I'm like, that's the same guy that said he's done selling his stock.
Oh my God,
now his stock prices went back up. It's the same guy, I swear.
But who was also not telling the truth because he still sold $1 billion more.
Dude, we should make a biopic on Elon Musk starring Gary Oldman.
It would be really funny.
That would be awesome.
I think it'd be really good.
We're starting our own Drunkenomics movie studio right here. Did you know that over $5 trillion exchanges hands on a daily basis? That's an average of over $220 billion an hour. Now, how does this much money move every single day, and why does it move the way it does? Here on Drunkenomics, two bartenders who also happen to be students at the University of Nebraska Graduate School of Business are going to sit down and drink to the global economy and try and translate it into English. So sit back, relax, pour yourself a stiff one, and have a drink with us to the comedy that is the global economy. And welcome back to Drunkenomics. This is the drinking podcast with an economics problem. This week, I would like to very happily and, very obnoxiously welcome you back as the more gracious host because the VIX, which is the volatility index, is at under 18. As a matter of fact, it's more accurately at 1695, which means I'm your more gracious host, Aaron Wong, welcoming you back to another presentation of Drunkenomics.
I can feel the grace leaving me.
Yeah, it's leaving you, and I can feel it coming here. It's being welcomed here. So, yeah. And of course, joining alongside me is, what do you call yourself again?
Yeah, so I call myself the less gracious host most weeks.
Usually.
But polite society, I go by James Goldwater.
Yeah.
So, welcome back, guys.
Yeah, exactly. So, first of all, I wanted to say thank you so much for an awesome year. Thanks for drinking along with us all these presentations throughout the year. Certainly hope you've enjoyed a lot of adult and young adult beverages, if you will.
The final is next week. There will not be a review session.
Yeah.
I'm kidding. That's not true.
Yeah.
There's no review session. That's definitely true.
Yeah, never graduate. But yeah, I just want to say thank you guys so much for the interaction this last year. I certainly had a good time interacting with all of you, answering questions, asking questions. I feel like I learned a lot from you guys. And hopefully you have learned from our presentations. I don't know if you have, but if you have, cool. But yeah, with that said, I also want to give a quick shout out to K Nello. Dude, were those shot glasses?
Woodworked shot glasses, yeah.
Yeah, dude. God, that thing is so cool.
They're not here yet, but they look awesome.
Yeah, I'm super flattered. I never would have ever thought when I started this podcast that one, anybody would listen to it, but two, that someone would end up making shot glasses like that, put that kind of craftsmanship into making something like that, and send it to us.
I'm excited to christen them once they arrive.
Dude, seriously, man, I really appreciate that. That's super cool. And yeah, I mean, that and many other examples of all this great interaction that we've had, people talking trash to each other, talking about trades that suck or are good, whatever it is, man. I've had a lot of fun this year doing Drunkenomics with you guys, and I hope you've had a lot of fun on the other side, drinking along with us.
Definitely, I always have fun talking to Aaron, so the actually creating of an episode is a lot of fun, and just talking, because, we're going to do that, being friends and all.
We're going to have this conversation anyways.
Yeah, talking to, seeing the feedback and stuff it's been pretty fun. Yeah. Some questions they look deceptively simple, and some questions will ask a question and then they speak to all these nuanced points to it. At the very end, I can just be like, that you nailed it.
Yeah, you pretty much answered your question with your question, but reading your question, I learned a lot about it too. So thank you, man. Thanks for showing me your perspective. And here's my opinion on your question that you've answered yourself. Here's my perspective. It's a lot of stuff like that, man. And seriously, if you want to join the conversation, I really strongly encourage you to find us on the metaverse and Twitter. That is at Drunkenomical, DRUNKENOMICAL. That's us on Instagram, Twitter, Facebook. And from there,
you can join the Discord, which is where the fun chats happen. Yeah. Where we definitely have a section dedicated to not financial advice.
Yeah. And that's something I want to talk about real quick, because someone on Instagram, in the metaverse, whatever.
We never came to a conclusion last week, I think.
Yeah, I don't think so either. But whatever it is, in the metaverse, on the metaverse, on Instagram, specifically within the metaverse, messaged us and said, where do you find this data? Because I posted a thing about yesterday, December 28th, 2021, 27,857,205 options contracts were traded that day, which is significantly lower than what it's been all year. I mean, the all-time highs this year was, I think, like 69 million. Nice, I know. But that's significantly lower. Maybe that's why the VIX is so low. I have no idea. But someone asked me where I find this information. And it's like, well, it's on the OCC. So if you're interested in trading options and you want more data on just the volume of options contracts and the volume and just really the market landscape, you can always go to the OCC.com. Is it the OCC.com? Whatever it is. Just type in the OCC on Google search and make sure you're clicking on the one that says the Options Clearing Corporation. They're the ones that track all the options data. And if you want any options data, that's where you go. Yeah. Just so you know.
It's essentially, it's not the clearinghouse, but it is it is all recorded. It's like, is it a clearinghouse? Or?
It's a clearing corporation, OCC, Options Clearing Corporation. They're the ones that also, the OCC, they're also the people that, when it comes to an assignment of an option, they're the one that matches you to the other side. Like, so if you exercise an options contract, they match you with someone on the opposite side of your contract. So if you're long a call, you exercise the call, they find someone out there that's short the call, say, hey, you've been pinned. You have to sell the stock to this person at this price. Yeah. Right? The OCC is the one that takes care of that.
So they're the main board. So essentially it's they're the one they would be the ultimate authority on what is happening.
Yeah, exactly. They're the one that keeps track of that. And that's something that I threw in the Discord too. I think
it might just be in the conversation in the metaverse.
But it's probably it might also be in Discord. I don't know. I haven't really checked.
I think it might be as well. But so there's a lot of places to get data. Some of it is legitimately just going to the clearinghouses, to the clearing corporation, and being able to see hey, what is happening? Because someone just being like, oh yeah, volume on this particular share or this particular equity, that may not tell you anything. But when you can see volume for the day in across the board, you're like, oh,
and which specific contract for a specific stock. So are people betting long term or betting short term? Or if you want to get really complicated, what if a stock did a split, right? What if it did an 8-for-1 split or something like that? Now what happens to your contract that previously entitled you to 100 shares? What happens to that contract, right? You go to the OCC, they tell you the new terms of your previous contract, which is pretty cool.
Yeah. So in the event of a split or unforeseen,
because if you're long one contract of Apple and Apple did a 1-for-4 reverse split, it's like, okay, well, are you still only getting 100 shares or are you getting 400 shares? Right.
Yeah.
Good question. Just saying. And then if you go to the OCC's website, you'll know what exactly you're getting. You might be entitled to some cash too. So with that said, not gonna lie, pretty uneventful week. It was so uneventful that 10,000 flights were canceled because they're just there are no events for you to need to get to because of Omicron. Mm-hmm. So we're just going to cancel 10,000 flights.
Yeah, it was over the Christmas weekend. About 10,000 flights canceled. I wouldn't say it was quite that simple. I know a lot of them were because of bad weather up in the Pacific Northwest.
There was that too. There was that concern. There's bad weather. I mean, I'm in Arizona right now. I live in Dallas, but I'm in Arizona for visiting family and stuff like that. And there's been bad weather here, which is crazy because Arizona is usually the haven for bad weather. But the week that I'm here, we've had bad weather.
Huh.
You don't say.
Yeah, no, there was bad weather canceled flights, but a lot of it is just the airlines don't have the staff with union requirements and stuff and security or safety requirements, which say essentially you can't have pilots flying more than a certain time. You can't have air crews flying more than a certain amount of time. That you have to essentially lay off crews. Then it's that flight's canceled because you don't just have pilots laying around doing nothing. So, but 10,000 flights. That's not insubstantial. I saw today it was 750 on Wednesday.
And it seems like every day this week at least there's been this many flights canceled or this many flights canceled or of the 10,000 that were canceled, this many were today. I think it's how it goes. But at least my flight here didn't get canceled. My flight back
hasn't been canceled yet.
That I know of has not been canceled yet. So I thought that was something that's at least noteworthy enough to bring up in the episode.
Yeah, no, it's we're back to kind of the weak point in the supply chain is the human labor aspect of it.
Yeah, seriously. And we saw the manufacturing numbers in November, and one of the things that was noteworthy was manufacturing, as far as output goes, is still going up, but it's not even close. It's going up way slower than when it needs to, and obviously that's a reflection of employment numbers slowly increasing as well, or unemployment numbers slowly decreasing, however you want to look at it.
The thing is, though, is even if we look at our unemployment numbers like that, we are still seeing very low labor participation, which seems to suggest that people are going back to school.
Hopefully it does, or some people might be retiring, and the crazy thing is, I feel like a lot of this pandemic has created a lot of day traders, which really isn't a form of employment.
Well, so I guess I don't know necessarily where this is all going to go.
Yeah, and day trading is also, it's a lot of risk. So.
Oh yeah, no, there's. The big one on day trading is you're trading off of old information, and the smart money and the institutional money has already made their move by the time you find out about it.
Right, and you're betting on something happening today. So that's another thing too.
Yeah,
but yeah, the markets seem to be shrugging off this Omicron thing. For a while last week, there was a big scare. Markets did tank, I think, at the beginning of the week last week. And then,
I know we've seen 5 days of the Dow up, I think, at this point. So
yeah, the Dow and the S&P. As a matter of fact, the S&P hit all-time highs for the 69th, 70th, and 71st time this week.
Well, that's good. I did have CNBC on today a little bit, and I saw Sully or whatever.
Brian Sullivan? Yeah, I love Brian Sullivan. He's one of my favorite anchors. Yeah, I love Brian Sullivan.
He was doing his bit, and he was sitting here talking. It's like the S&P he's like it's hitting records, but it's overpriced. If you want to see where I think the real value is, Japanese markets, they're trading at half their value. Yeah. And I was like, oh.
I don't know. I'm a little cautious about that, just because I just feel like, I don't know, I feel like foreign pressures in Asia, all that diplomacy pressures.
And some diplomatic issues.
Yeah, that's what I'm saying.
I would say, actually, I look at Japan and for my concerns, are slightly more demographically based.
What the weird thing is, a lot of Japanese stocks don't have ADR fees. I don't know why, but whenever you buy a foreign stock in America, there's always an ADR fee that you have to pay. For Japanese stocks, it seems it seems like half of them don't have ADR fees. It's so weird.
Well, what are you gonna do?
Yeah,
lucky you if you buy the right ones.
Yeah, seriously. Yeah, but my thing is what's going on with Russia, with what's going on with China. I don't know. Japan seems to be caught up in all that, but I also feel like Brian Sullivan has a point, because if not China, if no one wants to park their capital in China, which was something we talked about last week, where can they park it? Tokyo seems like a pretty cool place to park your capital.
Yeah, Japan's a pretty good spot. Taiwan's not terrible. Singapore exists. There's always Sydney if you're looking to go a little further away.
Yeah, so I think I think Sully's got a good point. I think Sully's hilarious. I think
he was. Awesome. He was very funny before the channel was changed. I was his style.
His comment, exactly.
One thing that I've noticed that kind of CNBC, at least on TV, well, not on the European, not on Squawk Box Europe, of course, but on most of the others, they've all been really, really quiet about Turkey.
Yeah. So what's going on with Turkey? What's going on with Erdogan?
What isn't?
What is and what isn't? That's a good question.
Yeah, well, the Turkish currency, so the lira, the Turkish currency is essentially in free fall at this point, or was. That fall has been arrested, taken into custody for, behavior.
For something, containment.
Yeah, for something. So what we can say at this point is that it is down 39% on the year, right? So from January 1st to now, it's down 39% from where it started the year.
Yep.
And that's
including.
Because last week, because it's up 50% from where it was this time last week.
Yeah, exactly.
And that's all because of intervention, right? So we've seen that the Turkish central bank has finally intervened to try and raise the value of the currency.
Yeah, so this intervention,
and of course, the biggest...
What is this intervention? Like, what exactly is happening that is causing the Turkish lira to increase its strength?
Well, the big one was that Turkey is going to backstop on certain accounts. They've intervened with billions of dollars, essentially. They're buying lira to try and drive up its value on foreign exchange, try and reduce the amount of it out there. So essentially quantitative tightening. They've also said that they're going to cover foreign exchange losses on certain deposits and essentially restore the currency to its mid-November levels. Which, to be fair, at that point was still down 30-something%. Yeah,
it already weakened so much by November. But so when it comes to tightening, so who exactly is bringing the Turkish lira back? Is it the Turkish central bank?
It's the central bank.
Saying we're going to call back all this.
They're trying to call back.
It'd be a good time to it's not it's not a dumb idea.
Yeah. So he's also what the other thing Erdogan's doing is he's trying to convince people who are saving money to save their money in lira as opposed to in foreign currency.
Okay, so I guess that helps because it creates it's less of a demand it improves the Turkish or the lira index.
It improves demand for lira and decreases the demand for other currencies, which devalues the lira.
It's essentially like This sounds weird, but it's like the Turkish central bank's way of saying, hey, everybody that's a citizen that saves money, you guys have to increase your reserves, right? When the federal it's like when the Fed says
sort of,
banks,
yeah, it's sort of it
right?
is.
So
You have to increase your lira reserves,
yeah,
not
exactly.
necessarily
So,
your reserves in anything else.
Yeah, okay, that too. But it's kind of like, their central bank is saying, hey, everybody that saves individually, you guys all have to increase, or we'd appreciate it if you guys increase your reserves. Obviously, maybe they can't say, I don't know what their government is like, but maybe they can't say, hey, you guys have to, otherwise you're going to jail, or otherwise you have to pay this tax penalty.
Yeah. So another thing that's happened is that I know that the Turkish central bank has signed swap agreements with other central banks.
So they've already hedged. That's pretty much what it is. They've already hedged against the demise of their currency.
And then some of their foreign reserve, their forex reserves are down $8 billion from last week at this point. So they've spent $8 billion. They've roughly converted $8 billion.
That's messed up. That's kind of like, that's exactly like The Big Short when they're saying like, okay, I think what you meant to say was you've secured a net short position yourself. That's kind of what...
I don't know what you want me to say.
Yeah.
To that.
It's like, I think you answered your own question. And I feel like that's exactly what the Turkish central bank is doing. It's just like, okay, well, the Turkish central bank needs to stay solvent, even though they're not a private company, but they still need to stay solvent, kind of like the Federal Reserve here needs to stay solvent. Yeah. So like, can you imagine if, I don't know how they would do it, but if the Federal Reserve started buying swaps against the dollar, it sounds like that's kind of like what the Turkish central bank is doing.
I wouldn't say that's what they mean by swaps. What they mean is it's more of an agreement to swap their currencies, just bank for bank, to get Turkish currency out of foreign hands and back into Turkish hands, so that if you want to buy it, you can't just buy it from the Germans. You have to come buy it from the Turks, who might then be able to exercise some increased control of their forex rate.
So a derivative
is how I interpret
derivative. Gotcha.
Something like that.
A CDO made up of CDOs.
It's called a synthetic CDO.
It's good.
As of now, they are forecasting the inflation rates in Turkey to be above 30%. So 30.6% or 30.06%.
Man, you thought 6.9% was bad here. Just kidding. 6.8.
Guys, you thought 6.8, 6.9 was
6.8. But I wish it was 6.9.
You tried 30%.
For a second there.
It's of course the biggest losers, the people that have been hurt the most by all this are the Turkish people. Yeah. Because their buying power is evaporating.
Yeah. I don't ever want to say like 6.9% inflation rate is better than 30%. Like, that's a terrible way to look at 6.9% inflation. 6.9% is bad.
To be fair, it is, but still,
to be fair, it is, but it still sucks. Yes. So I totally understand it. But also, what's going on with Russia? So Putin just said out of nowhere, we have nowhere to retreat, which I think is just
my response to Putin.
There's no land.
My response to Putin when he says, this is me personally, but when he says something like, we have nowhere to retreat from Ukraine, I was like, well, you could try back to your own border. That's a great start.
My thing is like, when he said that, I was like, yeah, because there's no land in Russia. There's no, Russia's tiny.
So this
isn't the landmass of Russia tiny?
Russia has a history. If we look at the last 200 years, they've been invaded by the Germans twice, the French once,
but that's
and this is and when they're attacked, they're pillaged, they're burned, a lot of damage is done, many lives are lost.
But the thing is, every time someone has tried to invade Russia, it's always sucked for the person that tried to invade Russia.
Sure, but
it always sucked for them.
Sure, but it hasn't for Russia. But it hasn't exactly been a picnic for the Russians.
I know, but that's the Russian strategy. Is they're like, we have so much land here.
Yeah, they trade space for time.
Exactly. We're willing to back up, and then all of a sudden you don't have enough personnel. Now your front line is so thin because it's so spread out across our horizon, and they just picked them apart.
Yeah,
that's how Russia would do it.
At the same time, Russia doesn't want to be invaded because that's worked 3 times. It may not work the 4th is kind of the argument. Well, see, here's the thing: I can understand any country that's been invaded multiple times going, "Hey, knock that off." Yeah. Now, this being said, I'm not taking the Russian side in this.
Of course,
I think Putin picked a fight by annexing the Crimea 8-9 years ago. He's now
2014. Yeah,
he now thinks that he can, we don't want. Don't let the Ukraine join NATO. That's a red line for us. Well, we're probably never going to let Ukraine join NATO. Yeah. It doesn't make sense. But here's the issue. If he picks a fight with Ukraine, I could tell you 3 member states of NATO that would get very nervous very quickly, which is the Baltic states, because they're going to go,
the Baltic states?
hang on,
just
Estonia, Latvia, Lithuania.
Okay. Yeah, so right there, right next to Russia. Yeah.
Right there. So those guys, they are NATO member states. So they're going to be like, this is not okay. The problem is Putin's kind of pushed himself into a corner. He's painted himself into a corner where he has to, for political stability and to save face, he can't leave Ukraine.
Well,
but at the same time,
it's a pissing contest. It's like, this is my urinal. Well, right? That's pretty much what it is.
It's very, my urinal. It's very much, if you look at like the Ukraine and like parts of Eastern Poland, Russia still views those as inherently Russian because they were parts of the Russian Empire before the Soviet Union, before the collapse of the Soviet Union. They were part of the Russian Empire. Yeah. So the Russian people view them as inherently Russian. Yeah. So you got this point where, I can understand him. The problem is when the head of the Russian central bank came out this year and said that the single greatest threat to the Russian economy is a return or increase of U.S. sanctions. He said the outlook for the Russian economy is good, except in this case, and that's the biggest threat.
Yeah, but Putin doesn't care because, at least it doesn't seem like he cares because he's still right there, like right next to Ukraine. He's saying, oh, we have nowhere to retreat to. When I'm like, dude, like you have the largest country by landmass in the entire world. You have nowhere to retreat to.
Well, he could also, my thing would be, again, is that he can remove his soldiers or his advisors, or he can get out of the Crimea, he can get out of the Donbass region, he can get out of course. He can leave Eastern Ukraine. Yeah. He's not going to. But, he's like, I invaded this place and you guys are acting like I should not be here. And it's like, well, you shouldn't. Granted, I realize coming from someone in the United States, that's pretty rich. Well, and I get it. It is the pot calling the kettle black.
Well, I guess the big thing is, I guess we'll see, right? Because he's meeting with Joe Biden tomorrow. Let's see what they talk about.
They're doing phone calls tomorrow. So
so it's a phone call. So they're doing a virtual meeting, which I'm not that excited about. But
well, again, so I look at it this way: there are people. Essentially, there are 4 players in this game. If we really want to talk about it this way, there's the Russians there's the Russians, the Ukrainians, the United States, and then Europe. Yeah. The Russians and the United States are talking. What'll happen is Russia can't really hurt the U.S. at this point. Our sanctions will will damage their economy far more than anything they do will damage ours.
Yeah.
They know that. Putin knows that. He's a pragmatic guy. He's a lot of he's a lot of things, but one of them is pragmatic. He understands what will and won't work. He knows he doesn't really have a whole lot of options.
I still feel like pragmatic is a really generous way of describing him. But
okay,
go on.
You've also heard me refer to him as a sociopath.
So as a pragmatic sociopath. He's done what?
But so the people he can hurt the Ukrainian people.
Yeah,
that's pretty easy.
Right
he can hurt no matter what he does. It's going to hurt the Russian people. He can hurt the Ukrainian people.
But
now on top of that, he can hurt.
But he's already done that for years.
He's done that too. So. On top of that, he can hurt Europe. He can hurt Europe. And here's how. He does control the natural gas supply to Europe. So if he closes that off to Europe, then what happens? Okay, so he thinks he's arguing from a strong military standpoint as well as controlling natural gas going into winter, whereas the U.S. is going, we can cripple your economy with in a heartbeat.
Yeah.
I don't know if any of you remember, but there was a point 3, 4, 5 years ago where if you looked at the Russian currency, the ruble, it was all over the place and just collapsing in value to the point where the price of vodka was frozen so that people could afford to buy it in Russia. And to the point where Apple specifically, I remember, stopped Apple stopped buying or stopped allowing you to buy their products in rubles.
Oh, yeah.
Had to buy in a more stable currency.
That's what Apple did with the Turkish lira. But that's the point.
That's really all I've kind of looked at in the last week.
Yeah.
So far in that time between Christmas and
the last time we had a drink together and then all that. So, but yeah, I don't know. I think there's a lot of writing on the meeting tomorrow, but I don't think there's obviously not going to be a conclusion after tomorrow.
I think we'll see where people stand, and then I think things will calm down.
Yeah, but they're not going to reveal anything. I'm not as optimistic, obviously. But I just don't think, I don't think anything is going to happen. I think this meeting is just going to be a waste of time, to be honest with you.
No, I agree. I don't think
dead honest.
I don't think anything necessarily comes to this meeting, but I also don't think anything comes out of the posturing either. So,
yeah. So, with that said, I really want to head into this one
we do
more
have the one question. We
question.
don't really have a topic. We have it's kind of those news things.
It's about dividends. What do you think? K Nello, the guy that made the cool shot glasses, the cool ass shot glasses.
Pictures to follow.
Yeah, dude. I'm not gonna. Or I guess he answered a question from someone else in our Discord from Panthson. I have to be saying that
Question
correctly.
from
It's not like
Panson.
this is weird. I got to be saying that correctly.
Turns out synthetic Buren,
Yeah.
we've been pronouncing correctly the whole time, and this one's like,
Yeah, exactly.
it's not.
So yeah,
It's the
Panson.
Panson question.
Yeah, Panson.
And it was essentially, do we have any thoughts on companies or firms that refuse to issue dividends?
Great
Berkshire Hathaway,
question.
for example.
Great question.
A company can increase its real value by owning more things, building, etc. But if shareholders aren't given a portion of the profit generated, isn't trading its shares a greater fool's scenario? So there's a few questions.
Well, I'll start by saying this.
First off,
so Warren Buffett. Sorry to cut you off, James, but I really have to say
you're good.
this is something that I learned from Warren because we're on a first name basis, even though we're not. But Warren Buffett once said that when you invest, there's two types of things you can invest in. You can invest in gold and hope the value of gold goes up over a 40-year period. Or you can buy a farm and farm on the farm and produce crops and sell those crops and receive dividends. And over that 40-year period, you also experience what is called capital appreciation and dividends. However, when it comes to stocks, it doesn't quite work like that. Now, this is where I'll let you opine.
Another thing we know about Warren Buffett is he loves a stock that pays a dividend. He hates paying that dividend himself.
Yes, he does.
And I know he's been, when asked if Berkshire Hathaway is ever going to pay a dividend, his response is no.
Well, the way he describes it is,
I can put that money to better use.
That's exactly what I was going to say. Okay, fine, you beat me to the punch, but whatever. Go on.
Got you, sucker. So you've got, essentially, when you've got a company that it's earning its revenue, it's making profits, so it has retained earnings. You have two options at this point.
Yep.
You can take your retained earnings. We have three options. You can take your retained earnings. You can do nothing with it. You can just sit on it and put it in the bank.
Yeah.
Two, you can reinvest it in your firm to expand your firm and do more business.
Yeah.
So capital expenditures. Or three, you can pay a dividend. You can give a portion out to the people, to the owners of the company. Shareholders, right? Yeah. So the school of thought on why you would just be sitting on cash is there's really only two reasons you sit on cash. You do not know what to do with it, which means you should probably pay a dividend.
Right, I agree.
Or you're saving up for a major expenditure, right? So you might sit on money and to do that CapEx.
Do you want to build HQ2 in Texas, Florida, New York, Chicago, right? You don't know, right? So you're sitting on all that cash because you got to put a down payment down on HQ2 or whatever.
Yeah, I know I have to make a major expenditure soon. Yeah. I'll just hold on to extra cash so I don't find myself in solvency issues. I don't find myself, maybe I've got revolving lines of credit. Maybe I have revolving, maybe I have notes that have some sort of debt covenant in them that if I have less than, where I might put myself into trouble by not being in as liquid a position as I want, as I need to be.
Well, and so at that point, so you looked at it from a very accounting perspective, which is awesome.
I do.
Which you do. And I look at it from a trading perspective, right? When it comes to buying stocks. Do you want to buy a stock that pays a dividend every month, every 3 months, every year, or not at all? And the thing is, generally speaking, companies that do pay dividends can afford to pay dividends.
And you generally don't see a whole lot of capital appreciation there.
Exactly. So like if you look at a company like AT&T, they pay a great dividend yield. I don't know what it is, but at the same time, their stock is $24 a share. Mm-hmm. So a 1% dividend yield, it's not, it's like 20 cents per share of AT&T that you own. But, either way, whenever a company does pay a dividend, there's a thing called the ex-dividend date, right? Which is something we talked about last year when we talked about dividends. If you buy stock before the ex-dividend date and you hold it through the record date, which means if you buy it the day before the ex-dividend date, which if you want to know what the ex-dividend date on a certain stock is, it's not hard to find. Pull up the stock on Yahoo Finance, pull up the stock on your brokerage platform, you'll see the ex-dividend date. Only if they pay dividend, of course.
Well, yeah.
Yeah. So if they do pay dividend, if you buy it before that date, so you have to buy it before that day. So if the ex-dividend date is 12/31/2021, you have to buy it on 12/30/2021. And if you hold it through the record date, which means you hold it through the day after the ex-dividend date, I know.
Yep.
So it means you have to hold it for 4 trading sessions. You have to buy it the day before the ex-dividend date, hold it for 4 trading sessions, and then sell it after the 4th trading session. So the 5th trading session after, that's when you have to sell it if you want the dividend.
That's the fastest possible.
If you really just want to buy the dividend, that's what it's called. That strategy is called buying the dividend. You buy it before the ex-dividend date, wait till the day after the record date, and you sell the stock. That's literally called buying the dividend. So Wait, I lied. I meant 4 trading sessions. So you buy the day before ex-dividend. The record date is the day after ex-dividend. So it's buy it the day before ex-dividend. There's the ex-dividend date. The day after that is the record date. And the day after that is the day after the record date. So if you sell the 4th trading session after the day you bought it, that's when you would be entitled to the dividend.
Technically, you're entitled to, and now that's if you're buying the dividend. If you already hold the shares, if you're the shareholder on the date of record, you get the dividend. Congratulations. Yeah. It's yours no matter what.
But because of trade,
it's going to get paid to you.
Exactly. But because of trade settlement, you have to buy it before ex-dividend. Yeah. And you have to hold it.
You have to possess it prior to the date of record, really.
Yeah, exactly. So because of trade settlement, right? So there's the ex-dividend date.
It all comes down to so records can be kept.
Yeah. And when it comes to options, you have to exercise on the ex-dividend, which is weird, right? If you're just buying the stock, you have to buy it before the ex-dividend date. If you're exercising an option, you have to exercise it on the ex-dividend date or earlier to be entitled to the dividend.
Yeah.
But so generally speaking, whenever a stock trades ex-dividend, right? So on the ex-dividend date is technically when the stock starts trading ex-dividend. Normally that day, the stock falls by the dividend yield. Normally it does. Now, if there's an optimism about the stock, then it'll bounce back up. But I'm telling you this as someone that has tried to buy the dividend. And almost every single time, I thought I would also be able to participate in the capital appreciation, and it doesn't work like that.
Yeah, no. So what it really comes down to with from a 20,000-foot view, when I look at what do dividends mean versus no dividends, generally a company that's still expanding, that still sees growth, that goes, I can make more, I could earn more money, I could get a better yield for you by expanding.
They have to keep investing. They have to keep going back. They have to
reinvest. And so they will not pay dividends. Yeah. They hold on to the money and they plow it back into the company, and the company expands.
Yeah, companies like Snowflake, Uber, like they have to keep reinvesting.
Now, what do you generally see? Now, when you generally see when something like this happens is you see the share price itself, right? Your capital investment, you see gain on it. You see that thing, you see your share price grow. And that's because they're plowing back in. You see this earnings. Now, what later happens is usually companies that are paying dividends are older, they are established, they are infrastructure level companies. Yeah. They're not going anywhere. They're about as big as they're ever going to get. They dominate
JP Morgan,
in industry space.
Apple,
Coca-Cola,
AT&T,
Cisco,
Verizon.
So when these companies get there and they say, look, our return, if we've reinvested our money, diminishing returns say we're not going to be able to get you as good a return as the general market would. We're just going to give you a dividend, give you some of your cash back. You can go invest that somewhere else to make more money. Right? Yeah. These are companies that are sitting here going, look, our revenue's secure, our profits are secure. There's no expansion. Yeah. This is where we are.
Permanently solvent, pretty much. I mean, not permanently, but
here's your cut. Whereas the companies that do not issue a dividend are generally ones that are still expanding, looking to get to a point where they're dominant in their sphere.
Yeah.
So
but those are the mega caps. Yeah.
Yeah. So the next point of his question, or at least as I read it, is if the shareholders do not receive the dividend, right? So are not receiving a portion of the profit generated, isn't trading in the shares a greater fool scenario? So let's just kind of define what a greater fool is. In economics, a greater fool is someone who thinks they can do better than you. And the way this generally works is it's you sit here and you've made your investment. Remember economics. You make rational decisions.
Yeah,
you are informed.
Behavioral economics. Yeah,
everything. You're doing everything correctly and right. Whoa. And so you get to a point where you say, I've calculated the value of this share will increase by 25%. And no more.
Yeah, behavioral economics is you spend your money in one of two things. You need the utility, or you think it's going to be worth more at a future date. That's pretty much it.
You get to a point where you said, okay, I only think this is going to go up 25%. It's not going to go up any more than that. You get to 25%, and then you turn around to look for the buyer. Well, you've done your due diligence. You know what you've calculated. So you are looking at that point, for a greater fool. You're looking for someone who thinks they can do better than you, or who thinks they're still up to go. They may be right. They may be wrong. What do you care? You've made the sale. So the question, as you're asking, so that's kind of who the greater fool is, what the greater fool is. And it's when you're asking, so when you ask, like, is trading in shares that don't pay dividends a greater fool scenario?
I think they're all greater fool scenarios.
Yeah, everything in financial markets really is. Yeah. Everything's a greater fool scenario. Because, so if you're buying from the company's probably going, holy cow, like, I can't believe someone's willing to pay for this.
Someone thinks that my company's worth this much, right?
Exactly. Yeah. Whereas if you're buying from someone else, the only reason you're selling is because you think that you've gotten all the gain there is.
That's a very... I wish that was the way.
Well, it's more complicated than that. It's more complicated than that.
Of course,
but
yes.
In the most simplistic level, I would only sell something if I didn't think there was ever going to be if I ever thought it was going to be more valuable.
That is the Richard Thaler model. Like if you wanted to follow his book, that's Richard Thaler, Behavioral Economics 101. Like, this is the peak. I'm going to sell it right here. Then you're selling it. At that point, you're selling to a greater fool.
To you. At least to you, they're the greater fool.
Exactly. But, this is the thing is, like, if you could predict the future, then there is no greater fool, right?
Absolutely.
The only fools out there are the people that cannot predict the future accurately. And that's exactly what trading and the financial markets are.
Yeah. So the question is, is all market trades, everything to do with markets everyone's a greater fool. Yeah. Someone else. Well, you could be the most rational guy on the block, but you might be the greater. But everyone you buy from thinks you're the greater fool. Yeah. Everyone you sell to, you think they're the greater fool. Yeah. Unless you're selling for, if you're selling for tax strategy reasons or something like that, you're playing a totally different game. And then the idea of a greater fool doesn't enter into it, but that's very specific.
Yeah, but even then, in that case, you're still the greater fool to the person that you're selling your shares to. You know what I mean?
Then you're creating yourself as the greater fool because you're selling something that you know has more upward value, but you have a different objective.
Yeah, exactly. You're selling these shares because they're at a loss, but you've realized all these gains on other shares, on other stocks. So you're selling these shares for a loss, and now someone else is thinking, wow, this guy's an idiot. They want to sell this at this price? Yeah, I'll buy it. And then they buy it. Hopefully it goes up. And if it doesn't go up, then they're the greater fool. But it's greater fools and greater fools. Like, people think these hedge fund managers, mutual fund managers are these incredibly smart people. Their job is to find more greater fools than themselves. That's exactly what it is.
Their job is to put themselves in a position where they're not do something and then be able to move it to a greater fool and then go find something else. It's very much.
It's also this, like, you're either a fool or you're a greater fool.
It's a game of,
right?
So if it's a big game of hot potato and musical chairs.
Yeah. Like, you're either a fool or you're a greater fool.
To quote one of the characters from the newsroom, the greater fool in a game of musical chairs, the greater fool is the person whose chair you dive for when the music stops.
Yep, exactly. That's the thing is, like, if buying dividends was that easy, everybody would do it, but it's not. And every single time you try to buy a dividend, the stock is going to fall. And I'm telling you this as someone that has tried to buy the dividend multiple times. And every time I've done it, I've received the dividend, but the stock has declined in value that day. So if I bought it the day before the ex-dividend date and I try to sell it the day after the record date, it's never been a good trade for me.
No, because in theory, the next day, the day after the dividend's paid out, you can say, oh, it was 40 cents a share. This share is now worth 40 cents less than it was the day before.
Usually almost always
or 4 days ago, because 40 cents is no longer there.
The ex-dividend date means it's no longer trading with the dividend. The dividend is gone from the stock, which means the stock price is gonna go down. So I'm not saying don't try it. Like, a lot of people do, and a lot of stocks do go up right the day before the ex-dividend date, just because people do try to buy the dividend.
Another thing,
not too but it happens.
Another way, Panson, to think about it is, it's different. It's kind of a different thing, but there's two ways to appreciate. You can have yield or you can have capital appreciation. And the easiest way to look at this is with bonds.
Yes.
Bonds have capital. If you buy at a discount, you have capital appreciation the entire way.
And hopefully some yield.
And you'll have some yield. Generally with stocks, with equities, when it comes to dividends, the higher the dividends, the lower the capital appreciation. The lower the dividend or zero dividend, you tend to see more capital appreciation.
Exactly.
So it's, are you going to make more money doing one or the other? Well, it all depends.
Yeah, so
it's
really just fixed income versus capital appreciation, right? Do you buy stock because you want dividends every quarter, or do you buy stock because you want the stock to go from $10 to $12? Sometimes you buy stock, it pays you 25 cents a quarter for 8 years, but it doesn't move from $10 very much, or you buy a stock and it goes from $10 to $12, pays you no dividends, and after 8 years you both sell. Who wins? Nobody wins, right?
Right, you're theoretically even.
Right, yeah, exactly.
Dividends
are taxed exactly the same, so yeah. So that's pretty much it. There's no secret to trading. If there was, everybody would be doing it, but there's also so many regulations where it's like, there's no one-way ticket anymore. Look what happened in 1929.
Or 1987.
Or 1987 or 2000. people try doing all these things. They try to get rich quick. And every time that's happened, a new law got slapped on.
Yep.
And it's made it harder for everybody to get rich quick.
No, it's
so
simple as it is.
Exactly. And
simple as.
Speaking of getting rich quick.
Let's put it this way. Speaking of buying in and getting a dividend out of it, check out our merch shop.
Exactly. Yeah, maybe this will get you rich quick. I mean, I don't know. I don't know what our horizons are. Are we to the moon, or are we to the moon in the sense?
How you define quick.
Yeah, exactly. Like, I mean, are we gonna go to the moon, or are we gonna go to the moon in the sense that Shuggy says we're gonna go to the moon? Which,
yeah. So if you check out the Discord, there's a great joke in there right now. In the spicy memes channel. Holy cow, Shuggy! That one had me laughing.
Spot on.
It's quality.
That is absolute quality. But I don't know. If you want to get in on the ground floor, I don't even know if this means getting in the ground floor, and you're interested, you like our content, and you want to help us keep producing content like Todd KKP does, my man, appreciate you. What a year we've had together.
Absolutely. We've got two kind of easy ways to do that. One, you can check out our merch. What's that website again? Drunkenomics.myspreadshop.com.
That's it.
You're right.
Drunkenomics.myspreadshop.com. That is drunkenomics.myspreadshop.com. From there, you can get hoodies, posters,
stickers for your laptop, stickers for whatever you want to stick them to.
We're working on more shot glasses, not as cool as Canello's.
We're working on glassware, bar stuff, as well as coasters. Looking at some coasters. So
coasters, that would be cool.
Promise we'll find something good.
Yeah. Seriously, drink with the coaster. If you don't, drink with one. It's world.
So
difference.
if you actually, I feel like we should probably just explain to people what coasters are for. A lot of people think coasters are protect the table from rings, and to an extent that's true, especially in your own home.
Yeah.
In public, generally what a coaster's there for is when condensation forms and falls and runs down the drink, the bottom of the glass gets wet.
Yeah, it doesn't get on your shirt.
It just drips onto you. So, coasters keep you looking drunkenomical and not just drunk.
Exactly. You want to get cut off in the next bar you go to? No. So get a Drunkenomics coaster whenever we get those available to the market. From there,
when they're available, and keep it drunkenomical. Yeah. Other than that, we also have a Patreon at patreon.com/drunkenomics, where you can join you can join our two patrons, and you can help us keep the lights on and the liquor cabinet stocked in order to help us produce content.
And keep us in good spirits,
at least
right?
as good
keep
as
us in good spirits, right?
As I say, help keep us in good spirits, guys.
There we go.
Especially this holiday season.
Exactly. Last but not least, I just want to say thank you so much for this awesome year. You guys are great. Hope you guys have a great holiday season going into the new year. Set some ambitious goals if you want, or don't. I don't know. Set some goals like, I want to be able to drink a full bottle of whiskey in a weekend. I don't know. I've already accomplished that goal.
With friends.
With friends. I already accomplished that goal by myself, but
I've done it too, but it's a rough.
Just saying.
Yeah.
I played chess, not checkers. I Ubered home, and from there, most importantly, seriously, I love you, Alcoholics, so much.
And I love you, Drinkonomous.
Yes. And I just hope that you please just do that one thing that I want you to do as you live out your daily lives.
We need you to stay drunkenomical, and we'll see you again in 2022.
Cheers, my friend. Happy New Year's, everybody.
Cheers. Happy New Year's, guys.